Good morning and welcome to Stock Market Today. It's Tuesday, December 31st, 2019. Last day of the year, last day of the decade. I am Dan Russo, the Chief Market Strategist at ETF Analysis. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by ETF Analysis. Head over to checkinganalytics.com/today where you can sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider in your inbox every trading day before the market opens. So U.S. equities were lower in Monday's trading, ending just off the worst levels of the day. Comm services, consumer discretionary, and healthcare were the worst performers. Energy, financials, and materials were relative outperformers, although all sectors were lower on the day. Treasuries were mixed, with the curve steepening. The dollar was weaker against the major crosses. Gold finished slightly higher, and WTI crude ended down about 10 basis points. As we come to the desk this morning, futures are a little changed to slightly lower in pre-market trading. Asian markets were weaker overnight, and Europe is on the defensive here this morning. We'll note that a lot of markets around the world are closed for holiday. Treasuries are a little changed. Dollar is weaker again on the major crosses. Gold is up 40 basis points, and WTI crude is adding 10 basis points on the day. As we look at the structure of the S&P 500 to get us going on the last trading day of the year, we had a stall in the market's year-end rally yesterday, and you can see this pullback here, but we are still holding above near-term support in the 3150 to 3200 range. We've been identifying this level for the past few days, having moved it up on Friday. Resistance, we're asking the question, really, is it near the 3250 level? I guess we'll find out, but that's kind of where the rally stalled. So from a price-based standpoint, we've been looking for a spot to identify resistance. Maybe we're starting to carve that out now. The RSI exits overbought levels, so now what we're looking for is holding within bullish ranges, similar to what happened during the post-Thanksgiving little 3-day sell-off. The RSI got down to 50 and holds. If we're in the same type of situation now, ideally what we want to see is a pullback stopping within this support zone and the RSI holding above the 40-50 range, indicating that it's remaining in bullish ranges and that momentum does remain with the trend. Chaikin money flow is bullish but continues to decline, especially yesterday, given the close was near the lows of the day. So a little bit of a stalling out in the year-end rally. Obviously, trading volumes are going to remain light for the remainder of the week. So really, as we get back to the markets next week, we'll get a better feel for the real liquidity dynamics playing out in the marketplace. For now, support is holding. The RSI is in bullish ranges. Chaikin money flow is bullish. I don't see any real reason to deviate from the course. If anything, maybe just wait for this little consolidation to play out and start to identify leading stocks in leading areas of the market. Hitting our market in a minute. What are we writing about today in our note? Well, the rally stalls on the second to last day of the year. We hit on that. It's Tuesday. We weren't here last week, but we're updating our relative strength work at the sector level. Technology remains the best relative trend in the market by our work. Energy is near relative lows and now has a bearish ETF rating. Consumer discretionaries starting to build a relative base, and we'll talk about what that could mean. Futures do point to a slightly lower open here today, as I said. Taking a look at the major indices now from a power bar perspective, the Dow loses 63 basis points yesterday, 6 bulls to 3 bears there. S&P 500 down 55 basis points, 111 bulls to 67 bears. NASDAQ, a slight underperformer, down 66 basis points, 24 to 11 on the bull to bear ratio for the Qs. And small caps were actually a slight outperformer yesterday, down 24 basis points with the major market down 55. Still skewed heavily in favor of the bulls from a power bar perspective, 728 to 245. Bonds down tick, sending yields higher. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Away from these groups, the other major markets around the U.S. are mixed. Let's hit our stock of the day now, and this is an interesting one because for those of you who receive my Tuesday weekly market survival guide, this is the name that we're highlighting: BristolMyers Squibb. Ticker symbol BMY, coming to us from the pharmaceuticals group, which we've been talking about of late. Bristol-Myers closed at 63.73, down 64 basis points yesterday, has a very bullish Chaikin power gauge rating due to strong earnings performance, very strong price volume activity, attractive financial metrics, as well as positive expert activity. So when we take those 20 factors and roll them up, we come out with a very bullish rating. The trend is strong as the stock is trading above this rising long-term trend line, and we've been talking about pharmaceuticals. Pharmaceutical stocks have been strong of late. What's interesting to me, and this really sets out the dynamics of our overbought, oversold indicator, is that it was built and designed to become overbought or oversold within the context of the trend. So what do we have here now? We have a stock that's oversold within the context of this strong trend. Market and model are in agreement as the rating has been bullish since mid-July, outperforming the market since mid to late August and continuing to do so. So a very bullish stock that's outperforming the market also has pretty intensely bullish Chaikin money flow readings, becomes oversold. Folks, this is the setup. This is what we're looking for. This is a leading stock in a leading area of the market that has become oversold with bullish money flow. BristolMyers Squibb is the type of name we want to consider. I'm highlighting it in my weekly note to clients that was published earlier this morning. Take a look at BMY if you're looking for bullish ideas within the leading healthcare sector and within the now leading pharmaceuticals area of that strong sector. Taking a look now at the sector tracker, the movement of the major sectors over the last 5 days. Now, again, liquidity an issue here, but we want to pay attention. Markets are trading, so we're going to pay attention to the developments that are playing out. Real estate towards the top of the list, although the relative trend there, for those of you who get my Tuesday relative work, you'll see that the relative trend there does remain bearish. But for the past 5 days, a little bit of a counter trend rally. Real estate up over 1%. Discretionary has come on of late. We're going to take a look at the relative performance of XLY a little bit later on in this show. Utilities, financials, tech, and staples round out the group of sectors that are higher over the last 5 days. Towards the bottom of the list, materials, comms, industrials, healthcare, a little bit of a counter trend move to the downside, and energy, the group that we've been watching closely, has started to wane a bit once again. We're going to take a look at the energy complex as well a little bit later on here, especially in light of the fact that the power gauge rating for XLE has shifted back to a bearish rating. We'll take a look at what that means a little bit later on in the show. Now, our industry in focus today is aerospace and defense. And this is going to be a good example of not becoming dogmatic in your views, identifying the shifting trends as early as possible. Now, aerospace and defense over the past 6 months has underperformed the S&P 500 by about 3.24%. Power bar ratio, which measures future potential, is skewed in favor of the bulls. 6 bullish or very bullish stocks for 5 bearish or very bearish stocks. It's currently ranked number 13 of 21 subsectors, but it has moved down 5 slots over the past week. Of those 6 bullish names, 3 that kind of look compelling as potential opportunities. I'm not saying they're set up at the moment, but names you want to potentially add to a watch list: AAR Corp, ticker AIR, Curtiss-Wright, CW, and Arconic, ARNC, with very bullish, and bullish ratings at Chaikin Analytics, respectively. But here's what I'm talking about with not becoming dogmatic in your views and identifying shifting trends as early as possible. XAR is the ETF we're looking at here, neutral rating and a weak trend below the long-term trend line. But pay attention to what was happening here. Throughout a lot of 2019, this was actually an area of focus for us. Nice, solid uptrend for a fund that was outperforming the market with a bullish ETF rating. We were identifying a lot of good names within that group. However, look at what started to happen in October. As rotation started to play out in the market, the relative strength began to wane to the point that in mid-October, XAR became an underperformer where it remains today. Money flow went from being persistently bullish to now bearish, where it does remain as well. Underperforming, neutral fund, underperforming, bearish money flow, neither overbought nor oversold. But this quickly goes from a group that we liked a lot to one that we're no longer focused on as much for bullish ideas. And you can really easily see how the trend has been changing, especially on a relative basis. Don't remain dogmatic in your views. Let the facts dictate how you position yourself in the marketplace. Former leader, now turns into a laggard. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Again, not a lot of company-specific news. Helmerich and Payne up 2.5%. Newmont hit a 52-week high, up 2.44% on the day. Drillquip FTI up 1.8% on a Monday's trading. Macy's up a little over 1.5%. Again, nothing really company specific to drive trading there. Oxy did have a headline. Looks like they're selling some assets. That stock was higher by 1.34% on the day. On the loser side of the board, CenturyLink announcement that their chairman is going to retire later in 2020. That sent that stock lower by 2.4%. APA, well, this stock had a big run last week, so maybe some profit taking playing out there, down 2.37%. Holly Frontier HFC down 2.25%. DD down 2.25% as well. No real news there. Same with Western Union. Western Union down a little over 2% without any company-specific news. Again, remember, liquidity is light. It is another holiday-shortened week. So let's take a look at what we're writing about from a sector relative performance standpoint. Technology, to me, this is still the best relative trend in the market. Taking a look at the XLK relative to the broader S&P 500, we can see a clear uptrend for the majority of 2019. Really, after bottoming out in late 2018, we've been in a steady uptrend. Retakes the 200-day moving average and trades above it for the duration of the year. That 200-day moving average of this ratio is rising. All the while, the RSI has remained, for the most part, at least through the back half of the year, in bullish ranges. This is what we're talking about. Notice that on the pullbacks in the ratio, the RSI doesn't get much below 40, definitely does not become oversold. That's a sign that there is bullish momentum behind this relative trend, as we are up here now near overbought levels. On an absolute basis, tech here's just a clear uptrend, pretty much a textbook uptrend, series of higher highs and higher lows, as technology has been a steady performer throughout 2019. It's been relative leadership and remains relative leadership, as well as one of our favorite areas of the market as the calendar flips to 2020. Taking a look at it from a Chaikin perspective, at the bottom of the screen there, you can see XLK has a very bullish ETF power gauge rating, and the power bar ratio is skewed in favor of the bulls. 20 bullish or very bullish stocks as holdings within the XLK for only 5 bearish or very bearish stocks. Now let's contrast the trend that we see on this page with this one. Energy trading near relative lows, and how has that bearish ETF rating? Here's XLE relative to the S&P 500, and it has been a clear and pronounced downtrend for more than a year and a half. This top right here is about the May 2018 timeframe. So steady downtrend on a relative basis below the precipitously declining 200-day moving average. This little near-term rally that we've been talking about, still not enough to break this series of lower highs and lower lows. At the same time, look at the flip side. Look at momentum here. Even on these recent rallies, momentum the RSI can't get above 60. So it's holding within bearish ranges. Now, we do have a small positive divergence here, so maybe downside momentum is waning, but the weight of the evidence still supports XLE not being there yet. Remember, I talked about it. As we've seen this little rally through December, I've said it appears to be a shift taking place, but it's still early. I've said that numerous times on this show over the past couple of weeks, and this is what I'm talking about. It's still too early. Take a look at the ETF power gauge rating. It's bearish. 2 bullish stocks for 4 bearish stocks as holdings within the XLE. Maybe this is the start of a trend change, but there's not enough evidence of yet to support coming off of a more cautious or bearish view as it relates to the energy complex. Finally, let's look at discretionary. Is it building a base? We think it may be. Taking a look at the XLY relative to the broader market, you can see the trend really for the better part of 2 years has been kind of flat within this consolidation, now below the declining 200-day moving average of the ratio. Now, we've seen a stabilization of late that's coincided with a bit of a rally in Amazon, which is why I'm pointing out Amazon is a 22% weight, a little over 22% actually, within this fund. RSI holding bearish ranges. We do have a small positive divergence here, which increases the odds that this support level is going to hold. It's interesting to note that on an absolute basis, we do have a breakout, right? So maybe we start to see a little bit of a holding here, and we start to pay attention to what's happening in discretionary while keeping in mind the large weight that is Amazon within the group. It has a neutral ETF rating, 10 bulls to 9 bears. That'll wrap us up on the final day of the decade. Happy New Year, everyone. I will be back on Thursday.